to capture that all in these discrete buckets of positive, neutral, or negative is really not super helpful. Are we actually improving our sense forecasting with these generative language models, or are we just doing it because it's the cool new thing?
Welcome to another episode of the Alpha Intelligence Podcast. I'm joined with my co-host Francesco Fabozzi, and this week it's just the two of us, which is actually the first time. We've had a few guests, but we wanted to talk about Francesco's research, which is about using technology, and most recently AI, in terms of understanding sentiment analysis across news, which is an interesting topic to me because I spent a lot of my career at Bloomberg News. How you get started, like now it's AI everywhere. And you
Yeah.
started before the pandemic, right?
Like AI used to imply just like using neural networks previously. And I was always a data scientist since I left undergrad in 2018. I've been working on focus mainly on machine learning. I had sort of my finance training and did a lot of financial engineering paired with data science or machine learning. And I started working with Professor Colm at NYU doing research. He said, let's do some tech stuff. This was probably 2018, 2019. He said, let's start doing some tech stuff. And I was excited about that because this information that wasn't actually captured in traditional financial data, right? So, how do you capture these sort of price movements when you have sort of slow moving fundamental data? What's moving prices in the interim, right? I knew that if you ever wanted to come close to solving the markets or pricing markets efficiently, then you have to incorporate news. And so it was exciting. The evolution of sentiment analysis was first dictionary approaches where you would take count positive or negative words. These words count as positive, these as negative, take some ratio, and there's your sentiment score. And that was a technique. And then, some finance people came in, law firm McDonald, who said, hey, this is actually not, if you take these generic words and you look at them in a financial context, you're actually not classifying them correctly. So you have debt, which might be like considered negative in a non-finance
Right,
context, but
right,
in finance, it's debt, right? Or
right,
neutral. And then you got to the point where instead of pre-partitioning these words into positive and negative word sets, you would basically just organize all of the words columns of a matrix and then have each document count the number of times a certain word came in there. And then you would fit
right,
some on some annotated data, whether that was positive, negative, or neutral. And you would have the predictive model read those features and predict whether it's positive, neutral, negative. And there were certain issues there with, you know, as you have so many more words coming in your set of documents, you have so many features that it really overburdens a statistical model.
right,
Approach wasn't really good. And then you also don't have context taken into account. So, context being like, if I'm saying this is not good, it's not keeping the word ordering. It's just putting all of these words sort of as features, and you don't know what the word not connects to, right?
right.
So, sort of, you're not really getting good sentiment out of that. Then came like these models, like these neural network models. And then fast forward a little bit, you get a BERT model, these encoder only models. This was sort of like the first time where, okay, now we're really seeing large language models because we're not necessarily, the previous realm was looking at how to represent text such that we can predict on some training label. Now, the objective came once we had these BERT models is that we're actually modeling text itself. The model starts to understand
Right.
language and all of the different linguistic components. You have word vectors, which capture contextual meaning that can be used as features for, whatever you want to do. They call it the downstream task in computer science language models. So you have this generic representation of a text, and now you can use that to train a secondary model to do whatever you want. And that was the main thing people were doing in finance. That's where a lot of my research started. I was doing research previously, but then once I started doing research for my PhD, we were using that. I was trying to figure out how to use that best. And these techniques are still pretty good. You could either train it to predict sentiment or to predict returns directly. So you let the returns associated with certain news determine if a news article comes out and there's a 5% return, you would connect this news, with a 5% return. Then came the generative language models. But the whole aspect before was we kind of moved past sentiment, right? We were focused on using these embeddings to predict returns. But then these generative language models came out and everyone went back to sentiment. Everyone said, okay, now we actually trust this sentiment that's coming out of these. Everyone went back to sentiment, but we were sort of more advanced than that previously. And part of my work is looking at, are we actually improving our scent forecasting with these generative language models, or are we just doing it because it's the cool new thing and you're not really getting much more juice out of it? And so
Yeah.
then my other research looks at like, okay, now let's use these generative language models to predict. So I'm trying to bring it back to
To
where
that, yeah.
the return predict.
I'm always thinking about like finding the right language to describe what's happening. People talk about AI like attention is all you need. It's really getting context, right? It's able to understand
Mhm.
context of all the stuff.
And so the attention that was what was sort of revolutionary about that paper. Attention is all you need is that, and this like birth the transformer model basically said instead of sort of looking at like the previous approach would be to use like a sequential neural network. Like you feed, it looks at each word at a time and like processes that word at a time. The attention mechanism basically said, okay, you can give me a word, the last word in the sentence, or, a word in the middle of the sentence, and I can look at, words, you know, 5 words down, 5 words back to understand context, right? Where like you're looking at the word it, like what is it referring to in a sentence?
Right.
Referring. So that was the attention mechanism component of that.
Yeah.
And that's what's giving
And
these models context.
what's interesting to me is that a lot of this is you're not programming necessarily, right? Like you're not telling the machine explicit rules. It's sort of like learning it through all those things.
Mhm.
So when you talk about your research using LLMs on the tech side, right? Because the last couple of weeks I've been writing about how, for instance, Stripe created a transformer-based payment model. They put in all of their payments and trained it on the language of payments. They said it was effective at spotting fraud, and it's just so. What was interesting to me and what I've been thinking about or just sort of learned is that LLMs are beyond text, right? It was trained on text first, but if you have any sort
Mhm.
of big time series or time data, you can train it on that as well.
Yeah. The beauty of the transformer model is that they're good sequence prediction models. Like what's coming next? What's the next word? You can do the same with a price series, right? And you can look at what's the past week of prices? What do I think is going to be the next price or return? Look back and see even farther back in the series, like, oh, there was a spike typically when this happened. So that likely means there's going to be a spike here. So it would be like very sophisticated technical analysis. What's beautiful about the language models is that we have these large tech companies that pre-trained everything. It distilled this whole language in there, and now it's seen all of these different sequences. If we trained it a model, it would be like training the equivalent in the price space would be like of ChatGPT in the price space would be if we trained this model on every single price series that ever existed,
You need a lot of
futures,
data, right?
yeah, like
Yeah.
everything, and it would be able to spot, okay, you just give it a price series, it's like, okay, this is definitely some sort of commodity. This is Bitcoin or some cryptocurrency, right? So, like, if you train it on all that stuff, it's really going to identify those patterns and really could uncover a lot of latent characteristics about these time series.
And you said somebody's going to do it, or someone to
May
do it.
have. Yeah, I would be,
Yeah.
I mean, who knows what happens at Renaissance, but finance is just more closed off than you're
Right.
not going to make money.
Right. Right. It's interesting.
Mhm.
I think Netflix is
Yeah.
doing the same thing where their recommendations are getting better, right?
Yeah.
Because it's predicting. All right. Well, you liked, and then once you start, or at least for me, it's like once I start thinking this way, I'm like, oh, this is why you need so much computing power. If
Yeah. Yeah.
everybody
Yeah.
is like, all right, well, if Matt's movie recommendation and he's watched 46 movies and, he's stopped watching this one, but he watched this one 3 times, that is a lot of computing power.
Exactly.
So, where do you see things now in terms of sentiment analysis? Or does it make more sense to sort of build the time series kind of transformer or sentiment? We haven't talked about how your research was like a lot more nuanced than how things were done previously,
Yeah.
instead of just the positive, negative, neutral.
Yeah. So in terms of moving forward, these are both inputs to a model determining your actions and price predictions. In terms of where I think things are going for sentiment analysis, there's so much information out there. We need to figure out how to get rid of the noise. Before, everyone could use the same set of news sources and they would come up with different predictions and how they use it based on these sentiment models because everyone had to construct different features, everyone was using a different approach. Now there's like one obvious approach, which is to use a large language model. It's going to be crowding out of that prediction because everyone's using the same predictive model to determine what to do. So you have the two part. You have one is the news you're using, two is the model, and then you get your prediction. The model part is going to stay the same. Everyone's going to be very correlated in their model. So now it's going to be these sort of agentic, like multi-agent RAG type approaches that are sort of collecting the information that is going to be used by the model that's determining whether or not to like buy or sell or positive, neutral, negative,
Right.
right? So it's really going to be on filtering out the noise from curating that for the model to best make the prediction. And then,
I see.
so in terms of what I've focused on, everyone's really focusing on agent-based approaches and curating information. People just tend to think, oh, let me use an open source model. At the beginning of ChatGPT becoming relevant in the sentiment analysis literature, everyone would take a ChatGPT model, run it through an API, give it the news and say, like, is this positive, neutral, negative? And you're just really losing a lot of information when you do that because you can have a news article that says some positive things, then some negative stuff, and then just factual things.
Right.
To capture that all in these discrete buckets of positive, neutral, or negative is really not super helpful. How do you determine what had the most positive sentiment? What is the best one that you should
Right.
buy right now? And then it doesn't blend well with systematic quantitative portfolio construction because you don't have this really quantitative variable. You have this sort of oracle discrete labeled variable that isn't really good for any sort of optimization or portfolio selection. And this was when the open source models were less, not really as powerful as a ChatGPT. So everyone was using
Mhm.
ChatGPT, and I said, hey, listen, we can use these kind of less sophisticated open source models. And if we just extract the probabilities that underlie the model with positive, neutral, negative, then we have this more granular story And if we formulate some variable based on that and we formulate portfolios, we can actually do better than ChatGPT when we look at it only in terms of positive, neutral, and negative. And then I also find that even if you have like the previous realm of models, we talked about BERT and like encoder only models. There's a model called FinBERT, which is, think 110 million parameter model versus, 110 billion parameter model, whatever ChatGPT is, you're in trillions of tokens
Hmm.
now or
Right.
trillions of parameters. You can get more equivalent juice if you're going to use ChatGPT in this less sophisticated way versus just using like the previous realm of models and you formulate portfolios with that. You can just do better, right? Take the
Right.
same, but just extract probabilities. It can do much better. Now with like ChatGPT, you can't extract these sentiment label probabilities. So I'm always a fan of open source language models as opposed to these proprietary language models like ChatGPT.
Right. Because instead of
Yeah.
having the probability turned into text,
Mm,
right, you're able to just see the probability. Correct me if I'm
yeah.
wrong. It's like this is 80% positive. This one's 79% positive. Something along those lines. Is that right?
Yeah. So what you'll do is these language models are it's predicting the next token. So you prompt it and you say, give me the sentiment. And you say, what's your answer? And then the next token, and you basically say, pick one of positive, neutral, negative. It outputs a probability of every word in its vocabulary being the next word. By prompting it, you get it such that most of the probability is going to lie with positive, neutral, negative. You extract those when you output this text based response, it's taking the one with the highest probability. So you could have 51% positive,
Hmm.
49% neutral,
Right.
negative, zero neutral. You're going to get the same score from both of them if you're only looking at this text based response. The reason why people do that, because it requires a lot of like computational know-how to run these models and a lot of computational resources to run these open
Right.
source models. A lot of academics basically will just want to use ChatGPT, the like API based approach, because you don't have to learn how to run up. You just send your text
Right.
open AI and it spits out the answer. All of these agentic approaches are built on these API calls, and very few people are using the open source models. When it comes time for this sort of last prediction part, you're just losing information if you're going to stick with a text based response. But someone would say, okay, why don't we just ask for a more granular output from the model, like a score of 0 to 100 for the article or 0 to 10. But when that happens, you notice that there's clustering, there's these natural clusters, a score of 0, a score of 33, a score of 66,
Hmm.
100.
Hmm.
There's natural buckets that occur.
That's
You're
interesting.
not really getting around
It's
these numbers.
That's interesting. I wonder why I'm always using ChatGPT, and I'll try to get like a hey on a scale of 1 to 10, rank this, and I
Mm.
found myself getting 7 a lot.
Yeah. I think there's like also something with like human psychology and how assess things in terms of scales, right? Like if I ask you to do something 0 to 100, you're probably going to end on some multiple of five, right?
Right.
0, 5, 10, 15, 20. Like
Right.
this is, you'll
1.1.
get like 33, right? Because that's like a third. But it's just, there's some aspect of human psychology where you're like, oh, if I ask you to do something, this is a 58, right? That's kind of an odd number to spit out on a scale of 0 to
Right.
100, right? Like,
Right.
that's how a human would assess it. But when you're actually going and extracting the probabilities, there's no sort of numerical response to it, right? You're going to get this very fine grain, like
Right.
some really granular,
You're getting some.
not going to get when you ask for a scale of 1 to 100.
It's interesting you were talking about all the computational resources. Where are people going to go?
I think everyone's going to move to either their own compute infrastructure with like
Right.
sensitive information, unless it's some sort of meta like llama. That was the model that was like the weirdest in terms. People always talk about meta and I'm using these open source models a lot, and I just do not like llama. Like I did not. It was
Because
funny because okay, so for my research specifically, you were trying to extract sentiment from these models. I used on llama, and you look, and it's just so positively biased in this paper that I wrote. It was almost completely positive, but sort of helped my case in the paper in saying that, okay, if everything's positive, how do you decide what you're going to buy, what you're going to short? Thing
right,
was, even if the portfolios, when you formulate them, you can only take out positive, neutral, or negative, you're going to basically end up with like a portfolio that has mainly long, like it's long, it's like almost a long only portfolio. But then when you look at, okay, now we're going to extract this more granular variable, even if the model's predicting all positive, right? Now we can at least extract the probability of it being positive, and its ranking of how positive the article is actually can formulate decent portfolios and outperform like ChatGPT 4 when you're only looking at these discrete cases. So now with that more granular sorting variable, all we care
it was
about
more
is in like the
effective.
quantitative. You're looking at cross-sectional portfolio construction using a bunch of different stocks. You're more concerned with the ranking as opposed to the number that's being produced, like the ranking of stock level sentiment.
I know you've been on the conference circuit lately. What's your sense
Mm.
of quant world and LLMs and how they're seeing it?
This is a good question. Everything you see is in terms of efficiency gains and really more engineering software type. I'm sort of the person where when I go on these panels or I talk, it's like, yeah, everyone's ignoring the alpha research side. You could generate signals from these models, right? People think they can only get text output from it. They're not really trying to use it systematically. There's the person actually I'm on the panel with today in this AI for finance, like it's like one of the only other people who actually like in this conference circuit space has focused on like the alpha generation. So what's good about these models now is that we don't need labeled training data. Before we needed everything to be labeled by humans,
Right,
model how to connect some textual representation to these human annotated outcomes, but
right.
specifically for a task. Like you would call these other models narrow models, like they're good at one thing and they can't do anything else beside that. Whereas these generative language models are generic models, they're task agnostic models, right? And that's why they're so good at all of these things. You can basically prompt them to output anything, and they're very sophisticated. So, you know, there's different types of signals that can be generated from these models.
I'm curious. You were saying folks aren't focused on the alpha generating side, and we spent the earlier part of the conversation talking about training on time series. If you have enough time series, when do you think they focus more on that?
Well, it depends on the firm and the specific desk and your strategy. It's more quantitative firms, systematic firms that are going to be more interested in this. My feeling is that they realize it's not really revolutionizing the alpha generation side, but there hasn't been a lot of creativity around this because it's computationally expensive. We need to be convinced that these more computationally expensive models are actually worth the additional, they
Right.
give some superior alpha than, these previous trends. So I think people are working on that. I don't think a lot of academics are necessarily working on because people aren't going to come and talk about what they're doing with the language models when they work at a firm. But a lot of academics are really just focused on not very, they're focused on uncovering financial phenomena with a language model or
Right.
looking at if it just generically can give you good sentiment that's good for pricing. And then the research question there is, okay, is sentiment priced in the market, or like what is the sentiment factor?
Thanks for joining us on the latest episode of the Alpha Intelligence Podcast.